Imagine this. You're finally nearing retirement. The sun's shining, the grandkids are giggling, and boom! That nagging thought hits you. Am I making the right move with my home? Are you locking yourself into a financial anchor by paying off your mortgage? Or are you throwing money away by renting? Stick around, because in the next few minutes, we're going to dive deep into this crucial decision, and I'll reveal a strategy that could completely transform your retirement. You won't want to miss this, so watch until the very end. Hey everyone, and welcome back to the channel. I'm Mike, your guide to navigating the often complex world of retirement planning. Today, we're tackling a question that's on the minds of so many pre-retirees and retirees. Should I pay off my home, or should I consider renting? This isn't just about numbers, it's about your lifestyle, your peace of mind, and ultimately, your happiness. We're going to break down the pros and cons of each option, explore the financial implications, and give you a framework to help you make the best decision for your unique situation. Whether you're a spreadsheet wizard or someone who prefers a more intuitive approach, we've got you covered. So, let's get started. Let's face it, the anxiety around this decision is real. Many of you are probably lying awake at night, wondering, am I making a huge mistake? Here's the problem. The fear of the unknown. Retirement is a massive life transition. You're shifting from income generation to income preservation. The thought of a huge mortgage payment hanging over your head can be incredibly stressful. You might worry about unexpected expenses, healthcare costs, and market fluctuations. The illusion of security. Paying off your home feels like a safe bet. No more mortgage payments, you think. But is it really that simple? You're still responsible for property taxes, insurance, maintenance, and potential WA fees. That's a lot of fixed expenses. The opportunity cost. What about the money you're using to pay down your mortgage? Could that capital be better invested elsewhere? What if you could generate a higher return in the stock market or other investments? You might be sacrificing potential growth for a false sense of security. The liquidity trap. Your home is an illiquid asset. If you need a large sum of money quickly, you can't just sell off a bedroom. You'd have to consider a home equity loan or a reverse mortgage, which come with their own set of risks. The lifestyle conundrum. What if your needs change? What if you want to downsize, travel, or move closer to family? A paid-off home can tie you down, limiting your flexibility. Renting's perceived instability. On the flip side, renting comes with its own set of anxieties. Many worry about rising rents, unpredictable landlords, and the lack of control over their living space. They fear the feeling of not having a real home. These are valid concerns, and it's easy to get overwhelmed. But don't worry, we're going to break it all down and find a solution that works for you. Now, let's get to the good stuff. Finding your personalized solution. Here's a step-by-step approach. Assess your financial situation. Create a detailed budget. Start by outlining your current income and expenses. Project your retirement income, including Social Security, pensions, and investment withdrawals. Be realistic about your spending habits. Calculate your net worth. Determine your assets, including your home's equity, investments, and savings, and liabilities, including any remaining debt. Evaluate your mortgage. If you have a mortgage, calculate the remaining balance, interest rate, and monthly payments. Analyze the pros and cons of paying off your home. Pros: elimination of mortgage payments, reducing your monthly expenses. Peace of mind and a sense of financial security. Potential for increased home equity. Cons: tying up a large amount of capital that could be invested elsewhere. Reduced liquidity. Ongoing property taxes, insurance, and maintenance costs. Analyze the pros and cons of renting. Pros: increased flexibility and mobility. Lower upfront costs. Potential for lower monthly expenses, depending on the market. Ability to invest more of your capital. Cons: potential for rising rents. Lack of control over your living space. No equity accumulation. Consider the 4% rule, and adjust accordingly. The 4% rule suggests you can withdraw 4% of your retirement savings each year without depleting your funds. If you pay off your home, you'll need a smaller nest egg to cover your expenses. However, if you rent, you'll need a larger nest egg to cover rent payments. Adjust the 4% rule based on your risk tolerance and lifestyle goals. Factor in inflation and interest rates. Inflation can erode the purchasing power of your savings. Consider how inflation will impact your expenses and investment returns. Interest rates affect both mortgage payments and investment returns. Analyze the current interest rate environment and project future trends. Evaluate your lifestyle goals. Do you plan to travel extensively? Do you want to downsize or move to a different location? Do you need to be close to family or healthcare facilities? Your lifestyle goals should drive your housing decision. Consider a hybrid approach. You might consider paying down a significant portion of your mortgage but not paying it off entirely. This can reduce your monthly payments while still allowing you to invest some of your capital. Consider a reverse mortgage or downsizing to a smaller property. Consult with a financial advisor. A financial advisor can help you create a personalized retirement plan that considers your unique circumstances and goals. Let's look at a couple of real-life examples. Case Study 1. The conservative retiree. John and Mary are risk-averse and want the peace of mind of owning their home outright. They have a solid retirement income and prefer the stability of a paid-off home. Case Study 2. The flexible retiree. Sarah loves to travel and wants the flexibility to move if needed. She prefers to rent, allowing her to invest more of her capital and enjoy a more nomadic lifestyle. Ultimately, the best decision is the one that aligns with your financial situation and lifestyle goals. There's no one-size-fits-all answer. By carefully analyzing your options and creating a comprehensive retirement plan, you can make a confident decision that sets you up for a happy and secure retirement. Remember, retirement is a new chapter, not the end of the book. Embrace the possibilities and make informed choices that empower you to live your best life. And that's it for today's video. I hope you found this information helpful. If you did, please give this video a thumbs up and subscribe to the channel for more valuable retirement planning tips. Don't forget to hit the notification bell so you never miss an update. Also, please leave a comment below and let me know, what are your thoughts on paying off your home versus renting?